company, joins in to talk about it. Mr. Bhatia, morning. This is Rima here. We've been talking about crude prices, $120 per barrel on Brent. It's a fresh 11-week high on crude prices. Margins contracted in Q4, and even for the full year, margins were under pressure. For FY23, what are the margins that you're looking at?
I think we're looking at sustaining those margins in FY23. I think the margins have to be looked in a slightly different context. So for the year as a whole, we had about a 30% volume growth, but the overall revenue growth for the year was about 48.3%. So that very well explains that, there is a growth which is coming from the price and there's a growth which is coming from the volume increase. Now, if you negate the price growth that is coming because of the revenue growth, which is coming because of the price increase, I think the margins, when I look at FY21 versus FY22, they're still healthy at sub 20% levels or so. But, when the raw material prices over the last 1 year have gone up tremendously, and that's what is your margins are looking a bit subdued in that context. But overall, I think a very satisfying year where we achieved about a 30% volume growth in some of our businesses like aseptic packaging. We had about 86%, increase in 86% capacity utilization levels, which are pretty
right. All right, Mr. Bhatia, as you said, the street likes the kind of numbers you've given. The stock is holding higher as well. But what's the way ahead? Just want to get some clarity. What is the volume growth number you're looking at for FY23? And also margin band, you're quite satisfied with margins being a little bit lower than that 20% odd mark. So do you think margin band of around 17 to around 18%, that's something that you would like to work with?
I think we will be very happy with that sort of a margin mix.
Okay, 17 to 18% and volumes?
Yes. Volume next year, we should have more clarity as we go down the year because, now the additional volumes we are going to be depending on the commissioning of our Dharwad project. Aseptic packaging capacity expansion has already been...
So for now, you're not giving us a volume growth number, is it? The volume target?
Wait for a while before we can commit any volume.
You want to give a minimum number, maybe a minimum of 10 to 15?
Yeah, 10% kind of an increase.
10% at least volume growth with margins of around 17 to around 18%. That's what you're targeting for FY23. We got that correct, right?
Yeah.
Hi, Mr. Bhatia. Good morning. You spoke about this, new capacities that you have added and also that incremental growth in the coming quarters will come from here. So can you give us a sense of, how much more are you looking to add? And also between your aseptic and the new packaging film lines, what will be the revenue contribution?
So the new facility, the additional capacity which has come our way in the aseptic business, should give us about a 600 crore top line additional. And the packaging business, the Dharwad expansion packaging films business should give us about 500 crore on a full year basis. Then we have CPP, which should give us about 100 crores in Dubai and 100 crores in India. So that's where, that's on a full year operations basis. Those are the kind of additional revenues we'll be looking for. We've also decided to invest in backward integration in our raw material security, and that will help us not only, improve our margins, but will also give us the, our raw material security as we are now looking to commission our Dharwad capacity. So the overall combined capacity being very substantial, we thought that, to insulate yourself against the raw materials availability and the margins there is very, very, very important.
When will your backward integration be completed?
It will take about 18 months.
Okay, so no benefit in FY23, perhaps in FY24, the second half. And how much will the benefit be? What is the extent of your backward integration?
I think we're looking that project to deliver about 20% IRR. That's what the threshold we are keeping. So it's very substantial. And, we've seen in the last couple of years a huge volatility in the raw material prices, as well as the availability issues at times. So I think it helps us protect both.
So Bhatia, we've been speaking for the last many years, and the aseptic division, that's something that you've been constantly focusing on ramping up. And it appears it's got more legs now, because in the coming year, you're guiding for nearly 500-600 crores additional revenue coming in from the expanded capacity. If you could tell us for the past year, what was the contribution coming in from the aseptic business? And for this year, that's last year's capacity plus this year's capacity that's coming on stream. What is the target out there?
So last year, the capacity utilization level was about 86%,
Okay.
up from about 55% a year before. I think 86% is when we look at it's like, almost 100% capacity utilization levels, what we have achieved, when we say about the season in particular. So April, when we have commissioned our new facility, so including the new facility, we are operating at about 90% levels currently.
What does it translate, sir, in terms of revenues? You're functioning at around 90%?
I think that will give us about 1,200 to 1,300 crores of a top line for the year.
For FY23?
Yes.
And what about your spreads as of now? If you could help us out on both BOPET as well as on BOPP, how have the spreads today in comparison to quarter four?
So the quarter four and the current spreads are almost at the same level. We're looking at plus 30% value addition over the raw material cost for the base fill. So they continue to be reasonably good, even when compared to FY22 or Q4 of 22.
Okay.
Both BOPET as well as the BOPP.
Just one question. Last year, 47% revenue growth was a split of 30% on volumes, and the balance was realization improvement, right? Are you looking to undertake any more price hikes?
So the price hikes are, a phenomenon when the raw material goes up. So I think, I've guided earlier also that we had shortened our order book levels. And we've gone back to a very short period of 7 to 10 days. So, the raw material prices, the way they go up, the packaging films business, is passed on almost instantly. Okay. In the packaging, there is always a lag, and that's where the margins get hit.
Mr. Bhatia, very quickly before we let you go, you're ramping up on various capacities, expansions as well, and that's why your interest costs have gone up for the past year. What is the current debt in books? Is the consolidated net debt in books, and any plans of reducing it, or that will not be possible because you'll be having, various plans that will be coming on stream? Very quickly.
So 31st March, the net debt is about 3,975 crores. Okay. And when we look at in the context of EBITDA, it's about 1.74x, which is a very, very healthy numbers, leverage numbers. Okay. And obviously, we have scheduled repayments each year. Next year is about 500 crores. Okay. So that much of that will definitely get reduced.
Good speaking to you, Mr. Bhatia. Thanks so much for giving an insight into business. You're sounding optimistic about the coming year. We'll chat with you sometime during this year, in fact, get an update whether or not you want to move that volume guidance in particular.
Thank you.
For the time being, we'll slip into a short break. But as we do that, here's some great news that's coming in. According to the Global Digital Subscription Snapshot,